Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's action in automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. We've got a lot to report on, so let's dive right in. One positive outcome from the pandemic and the resulting financial downturn is that Americans are starting new businesses at the fastest rate in more than a decade. Applications for employer identification numbers that entrepreneurs need to start a business have passed 3.2 million so far this year, compared with 2.7 million at the same point in 2019. Historically, financial recessions have been a good time to launch businesses. Many of today's best-known companies were founded during the Great Recession in 2009, including Uber, Groupon, Venmo, and Airbnb. I've been speaking recently with a number of new automotive tech startups who are taking the opportunity to launch new companies during COVID, many of these being started by industry executives who are either unemployed or underemployed. I have a strong feeling that we will see a slew of new innovative automotive tech startups emerge from this challenging economic period. Big news this week in the software space. PE Hub reports that CDK Global has launched a sales process for its international division. First round bids are due in just 2 weeks. During its fiscal year ending June 30th, CDK's international business generated $321 million in revenue. The division could command 3 to 4 times revenue, which would suggest a potential valuation of $1.3 billion on the high end. CDK's stock price didn't seem to react to the news. The big US players have historically struggled with operating DMS software overseas. In 2018, Cox divested international DMS firm Incadea after struggling with operating the business profitably. Cox had acquired Incadea as part of their DealerTrack acquisition in 2015. The company had been passed around like a hot potato and was owned by Reynolds & Reynolds from 2003 to 2007 before being acquired by DealerTrack in 2014. Keep in mind that the automotive supply chain and the relationship between OEMs and their dealers varies widely in international markets, and quite often the automakers have much more power over dealer software vendor selection than we experience here in the US. It's great to see that the automakers' investment appetites haven't been dulled by COVID-19. GM recently invested $2 billion into troubled electric vehicle manufacturer Nikola. 2 weeks ago, Toyota launched Woven Capital, an $800 million global investment fund to support growth stage companies in the areas of autonomous mobility, automation, artificial intelligence, machine learning, data and analytics, connectivity, and smart cities. This week, we saw both Porsche and Toyota participate in a $23 million Series B round for Aurora Labs. Founded in 2016, Aurora's machine learning algorithms uniquely address all 3 stages of an automotive maintenance system to detect, repair, and seamlessly implement over-the-air vehicle updates. The company dubs itself self-healing software. I expect that OEMs will continue to have a strong appetite to invest in early-stage technologies to diversify their businesses and give them a competitive edge in areas like autonomy and electric vehicles. It's good to see that the F&I space continues to consolidate in one of the most active areas for M&A this year. In August, National Auto Care announced the acquisition of Excel, an independent F&I agency based in North Carolina. Just the month prior, National announced the acquisition of DMG, an independent F&I agency based in Chicago. In a separate deal in July, Portfolio acquired National Automotive Experts and NWAN, united 2 leaders in the F&I product provider administration and reinsurance space. In May of this year, IA Financial Group finalized their $720 million acquisition of IAS. IAS is one of the largest independent providers of solutions in the US vehicle warranty market. And this week, Protective Life reached an agreement to acquire Revelos, a diversified, full-service F&I provider that offers a suite of products. When closed, this transaction will represent Protective's 58th acquisition. The closing of the acquisition is expected to occur in the first quarter of next year. I've been speaking with private equity players that continue to see healthy opportunities in the F&I space, and I expect consolidation and deal flow to continue. CarMax reported record revenue and profits for their second quarter, which ended on August 31st. CarMax has sent a strong message to online retailers Carvana, Vroom, and Shift. CarMax completed its omni-channel rollout to its 220 stores, aiming to give customers a personalized and seamless buying experience, whether they are shopping online with a device of their choice or visiting a store. CarMax's omni-channel experience enables the consumers to seamlessly do as much or as little, online or in person, as they want. Alternative delivery methods, curbside pickup or home delivery, rose slightly in CarMax first quarter, but remained less than 10% of their overall sales. The company said that its research found that customers don't want to be forced to interact 100% in-store or 100% online. So far, CarMax's progress on their omni-channel efforts hasn't taken any wind out of the sales of Carvana and Vroom, who are trading very close to their all-time highs. Online retailer Shift Technology has been a recurring topic on this show as we eagerly await for them to go public. Carvana IPO'd back in 2017, and Vroom went public in June of this year. The Special Purpose Acquisition Corporation, or SPAC, that is acquiring Shift Technologies to take the company public, has called for a special meeting on October 13th, where shareholders will vote to approve the business combination with Shift. Expect that Shift will be publicly listed shortly after October 13th. We'll be watching that IPO and the company's market cap very closely. So that's your weekly Friday 5, a quick wrap up of the big deals in the automotive technology space over the last week. Word on the street is that the M&A pipeline is heating up. Fear of possible increasing tax rates, the strong stock market, uncertainty around the presidential election, and strategic acquirers wanting to take advantage of COVID weakness could mean that we see a bunch of companies crashing the gates between now and the end of the year to either rush to become public or to get their companies sold. It's an exciting time to be in the automotive space. Please feel free to contact me anytime. Here's my email address, and I look forward to catching up with you to discuss the industry news. Thanks for tuning in to CBT News for this week's Friday 5, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.